Detroit's engine now runs on Japanese fuel. From Toyota to Subaru, 7 major Japanese automakers now power Detroit's engine. These brands together support more than 500,000 American jobs and generate $170 billion in U.S. sales. But today, the White House is considering a new move, a 25% national security tax on foreign cars. If implemented, this wouldn't just hit showroom prices. It would send shockwaves through the entire supply chain, from Ohio's seat factories to Alabama's steel plants. So who gains and who loses when Washington rolls the dice on this tariff? Let's break it down. Don't forget to like, subscribe, and turn on notifications to stay up to date with our content. What once seemed like an abstract policy issue is now shaping into a real-world stress test for the U.S. economy. Since late 2024, tense negotiations between Washington and Tokyo have been reflected in policy memos and factory schedules from Detroit to Texas and Kentucky. The central question? If Toyota, Honda, Nissan, Subaru, Mazda, Mitsubishi, and Suzuki are forced to pull back or exit the U.S. due to this 25% tariff under Section 232, how much will the American economy lose in jobs, dollars, and tax revenue? These 7 Japanese carmakers contribute an estimated $170 billion in U.S. sales, $47 billion in added value, and a broader economic impact of $1.3 trillion when you count fuel, services, and surrounding industries. Like how a simple table can spark a housing boom in Turkey, auto manufacturing in the U.S. drives a vast network of suppliers and service businesses. From steel mills to logistics firms, from an upholstery workshop in Ohio to a Las Vegas tech startup writing after-sales software, this isn't just about the vehicles themselves. It's about everything that keeps them moving. According to 2023 data, Toyota made 1.25 million vehicles at its Texas, Kentucky, and Mississippi plants. Honda produced 970,000 in Alabama and Ohio. Nissan built 770,000 in Tennessee and Mississippi. Subaru added 221,000 in Indiana. The Mazda-Toyota joint plant in Alabama made 150,000. Mitsubishi, while no longer building in Illinois, still ships 75,000 rebadged vehicles annually. When imports are included, Japanese brands accounted for 6.32 million U.S. vehicle sales in 2023, 43.6% of the market for passenger and light commercial vehicles. Sales data for 2022 and 2023 highlight the impact of this dominance. Toyota Lexus sold 2.1 million in 2022 and 2.28 million in 2023. Honda Acura rose from 1.22 million to 1.34 million. Other brands, Nissan, Subaru, Mazda, Mitsubishi, and Suzuki, showed similar growth driven by chip supply recovery, hybrid demand, and gas price hikes. At an average price of $38,650 per vehicle, 2023's total Japanese brand revenue hit $169.7 billion. About $31.3 billion of that flowed back into the United States through taxes, more than some states' entire education and health budgets. Here's where the strategy breaks down. Can Japanese brands survive a 25% tax hike? Their United States factories already use high local content. Toyota's San Antonio trucks are 65% North American. Camry and RAV4S in Kentucky, 72%. Honda Civic in Ohio, 68%. Nissan Rogue in Tennessee, 58%. Subaru Lafayette, 52%. But the tariff wouldn't just target imported cars. It would also hit parts like batteries, transmissions, and electronics that come from Japan or Mexico. That means, well, double penalties for automakers. Margins are tight already. Toyota North America at 7.1%, Honda at 5.6%, Nissan at 4.3%, and Subaru at 8.8%. Slapping a 25% tariff on top could push some into loss territory, especially with the added burden of hybrid tech costs. That's why scenarios like halting investment or moving production overseas are gaining traction. Now let's look at the job loss impact. For Toyota, that's 35,200 direct jobs and 90,400 indirect. Honda faces 28,100 direct and 61,000 indirect. Nissan stands at 18,950 direct and 47,600 indirect. Subaru could lose 6,900 direct and 14,800 indirect. Mazda-Toyota joint venture, 4,800 direct, and 9,200 indirect. Mitsubishi, 1,700 direct and 3,200 indirect. And finally, Suzuki, 900 direct and 1,400 indirect. Add it up, and you get over 436,000 direct and indirect jobs, plus another 113,000 induced jobs. Throw in 17,000 white-collar finance workers, and, well, you pass the 500,000 mark for Americans tied to these companies, wages and benefits. That totals $93.1 billion per year. In key states, this industry accounts for anywhere from 11 to 22% of manufacturing jobs. If Japan pulls back, unemployment could rise by 2.6 points in Mississippi and 1.8 in Alabama. The Congressional Budget Office warns of some pretty serious tax shortfalls. That's $18 to $21 billion lost in 2026 and $26 to $28 billion in 2027. This includes not just corporate and payroll taxes, but lost revenue from dealer fees, logistics contracts, trucking, and rail leases. Over 3 years, the tax gap could hit $58 to $62 billion. Some folks argue that Korean, European, or US brands will just fill the void. But, well, Georgia Tech models show that only about 40% of that lost production would actually be replaced. The rest? It's basically lost to used cars or, just delayed purchases. The tariff could also, rattle the bond market. Japanese companies hold about $1.06 trillion in U.S. 30-year treasuries. Even a 5 to 6% sell-off could raise the 10-year treasury yield by 30 to 45 basis points, offsetting much of the expected $78 billion in tariff revenue with, honestly, higher borrowing costs. And it gets deeper. Japanese automakers didn't just bring cars. They brought systems lean manufacturing, just-in-time delivery, Kaizen improvement, and-on alerts, and flexible line design. These methods, honestly, revolutionized American subcontractors, from steel furnaces to tech suppliers. Today, about 197,000 American workers are trained in Japanese systems. If production moves, these systems go too, along with decades of efficiency and innovation. Training programs, R&D hubs, and productivity gains tied to Japanese investment could just vanish. Even consumer behavior would shift. 3 out of 5 hybrids and 2 out of 3 subcompact SUVs are Japanese. A 25% tariff would raise their prices by $4,400 on average, even entry-level models. That could push buyers to older used cars or diesel pickups, which honestly undermines both green goals and affordability. And while some may think U.S. brands will benefit, most, like Ford, GM, and Tesla, are focused on full EVs by 2030. None of them are building new compact hybrid plants anytime soon. Even if they tried, it would take until 2028 to ramp up. So in reality, this tariff could spark supply shocks, used car booms, slower GDP growth, higher inflation, and a decline in consumer confidence by 6 to 8 points. In short, a 25% tariff may sound like a strong America First move, but it could actually tear apart one of the most successful manufacturing ecosystems of the last 30 years, pushing up prices, raising job losses, and hollowing out America's industrial base. Even if Japanese automakers don't leave immediately, the slowdown would be felt. Maintenance costs rise, supply chains break down, and the efficiency engine that once powered U.S. manufacturing begins to stall. What do you think? Is the 25% tariff worth the risk? Let us know in the comments. And don't forget, subscribe and hit that bell to stay updated on future stories like this.